really good to see you all in the same room. It's been a long couple of years and we've missed you all. We've done a few of these in virtual world. They've been great, and this has been part of those roundtables, and we've seen a few of you pop up on Zoom, but it's so much better to be here in person. Unfortunately on Zoom I don't get hangovers, but I do tend to get hangovers at conferences. So everyone's made a massive effort to be here, so I want to just start by just give everyone a round of applause for making it here. I've lost my notes, so I'm just going to wing it. So Liz is here to moderate today. We've all known Liz a long time. Liz started Africa Ahead during lockdown, which is not the best time to start a new business. We are all friends in this room. I really just want to urge everyone to support Liz. Please sign up for subscriptions on the way out. I'm now been employed by Liz. I commission. I joined NamibRe last night. And now Liz has made me an offer to be a subscription salesperson. But no, we've known Liz a long time, but Africa Ahead is important because we don't have many news sources sharing our news. So it's really important to have a magazine that focuses on Africa. And Liz has been around for many years, so Liz. But yeah, there's no one better to share our news with all of our friends. The roundtables that we've done online have been great. For this one, because we're in a room, I've decided that the topic, Liz and I decided the topic. Udai said, no way are you doing that topic. But I thought, Udai, we're going to go a little bit spicy, a little bit controversial, hopefully. But please remember, we are amongst friends. This is a safe room. I'm editing the video. So, you know, I accept any currency if you want to be edited out or change the comments. But it's a safe place. Please don't worry about sharing a different opinion. No one's going to argue with you. It'd be great to hear all your opinions. So I'm going to hand over to Liz to moderate and start the session.
Thank you very much indeed. So this afternoon we're looking at local content and how it works or doesn't work in the insurance industry in Africa. This is a conversation, so I really want you all to, obviously don't talk over each other, but feel free to come in. Don't wait for me to invite you in. I will if I don't think you've said very much, and I think maybe you should say something. But try, it's a conversation. We'd like to hear your views, kind of across the thing. So local content and its importance or not, or its impact in the insurance industry in Africa. To start us off, our first question is, how can you reconcile local content policies with the African free trade vision? So can you have local content when, as we just heard this morning from the President and from others of the speakers, that actually it's going to be so important for the African economy to actually break down national barriers? Can the two things work together? I don't know who wants to start us off on this one. Don't all rush at once.
So
yeah, Lesley.
I'll start. So, from my perspective, the whole idea of local content is to develop the local insurance and reinsurance industry. When you look at the net retentions of many local insurance companies, I think they are quite small, and a lot of the business, especially on the specialty and commercial risks, ends up in the European markets in London and in Paris. So on the one hand, I think there is a need to address that, because if you have very low retention in the countries, then the skills never really develop within the country, because the local fronters are not interested in understanding the risk of developing the technical capacity to be able to underwrite it, because everything will just move out of the country. And the insidious effect of this is higher prices for clients, right? Because the fronting fees are not paid by the reinsurers; they are ultimately paid by the client. So this makes insurance more expensive for the local market. So the local content regulation, I think, is important to address that. However, there is due consideration needs to be given to the speed at which you move, because if you force local companies to retain more risk that they don't understand and they don't have the capital to support, then you're going to collapse the entire insurance and reinsurance industry very, very quickly. And then in terms of how all this integrates within the African free trade area, for me at least, I would like to see services being included as part of the free trade area. Right now, I think there's a lot of emphasis on free movement of goods, but then this has to be supported by also on the service side. And there are a couple of precursors to that. So firstly, we need, for the benefit of the regulators in the room, that we need, I think, greater convergence in terms of regulations, because if everyone is able to compete across markets, then everyone has to be able to play by the same rules. And then secondly, we also need to move away from the need to have very high amounts of capital in each and every jurisdiction that you do business in. So if you, just to pick some numbers, if you say the minimum capital in a country is 100 million for an insurance company, if you're targeting a 15% return, that means that you need to be generating $15 million of profit per year. If you are running your business very well, you've got good loss ratios, good admin cost ratios, and your margin is around 10%, it means that you need to be getting revenues of $150 million, of which, quite frankly, there are not that many insurance companies hitting that level of revenue. So again, the sustainability also needs to be linked to capital, because ultimately we're all business people and we'll allocate capital based on where we can get the highest returns. So there needs to be, I think, more integrated thinking in all the various issues. And currently what we see is a disconnect of all the various actors moving at different speeds without coordination. So I was going to say this is a brief overview, but this is a rather lengthy.
I think following that overview, we can now close the
I just want to follow up. Leslie's point was fairly similar to mine. I do it in a little bit more simple terms because I'm a simpleton, as everyone knows. But for me, localization, in my mind, there's two elements to it. The element that I really like and think it's a great business model is the national reinsurer model. I think it works. NamibRe's here, TIRA, I think I saw, Ethiopia at the end. It's a good model. It's reinsurers doing reinsurance. Here's where Udai loses his temper with me. The localization that I don't like, and I think is dangerous, and I've seen as a broker some very scary things, is local FAC, co-insurance, doing insurance companies doing reinsurance. Yeah. Exposure management seems to go out the window. Pricing seems to take a nosedive. And it was $1 billion limit, and I went to Lloyd's, well, my team went to Lloyd's, and the price was coming out around 900,000. I went to Swiss Re, Munich Re, Africa Re. Eventually, my team, got a price at around 550,000. Really pushed the price. Yeah. It went locally co-insurance for $200,000. And guess what happened? The next day, all those co-insurers, Ryan, please get me facultative support. Our treaties exclude petroleum. Yeah. Why did you write it? So it's on their net, and I know we've got regulators here. But if there is a loss, and petroleum does go bang, it's not going to be a small loss. I don't think the market can afford to pay the claims. Yeah. The whole industry could go out of business in a heartbeat. And I think that's where my localization there is a dangerous game, and someone is going to face some severe consequences.
Yeah, I was going to write off the back of Leslie's comments, but again, Ryan has just covered most of it, so maybe the next question I'll try and go first. But I totally agree with you, heavily agree with what Lesley pointed out earlier on. I've just recently moved back to Nigeria, become fully localized. Having seen insurance, reinsurance from Lloyd's and the way it's done here, so leaning towards Ryan's point, I'll prefer lean heavily towards the reinsurers doing the FAC retros or any reinsurance back into Lloyd's than the insurance companies, so that it's properly regulated, prices are done properly, and that way the risks are controlled in a more monitored manner to the benefit of the insured. So it's a shame we don't have Mr. Commissioner in the room, to kind of hear our own views from our own side and how we see it as carriers and the things that we suffer. Because if we have regulators supporting most of the things that we want to achieve with trainings and trying helping the insurance companies grow in terms of their treaty performances, will go a very, very long way. So I just wanted to contribute heavily to Lesley's point and Ryan's one.
Thank you.
Thank you. The way I read it, I'm going to give 2 examples. I've been working for Swiss Re for years, and I think around 2016, 17, talking to the CIMA region, the Francophone, they say they are going to localize a lot of business. I say, I don't think it's a good idea, because of course, I was working in the other side, so I needed to get the business, and because Swiss Re was not localizing, didn't have an office in Africa. And I was fighting against that, and I even went to see the commissioner, the CICARI, etc., just to explain them that I don't think it's a good idea. Because if they take everything, there is nothing left for the other international players. And then I moved back to Continental to Africa and say, okay, I think it makes sense. Because we need to keep the business here. Okay? And at the same time, after a few years, I said, I don't think it's a good idea to keep that business in Africa. We don't have the expertise. We don't have the expertise. Do we know what you are writing? Most of the time, you don't know what you are writing. If it's a single property business that we know, but if it's oil and gas, complicated risks, cyber, do we know that? Do we know the exposure behind? Accumulation, we have the tools to calculate that, to evaluate that we don't have. Do we have the people as well? Do we understand what they are doing? So I say, if we want, it's good to localize, but to a certain degree. I think it's important that we bring as well the international players. I think in markets like Africa, and the developed market, when you look at the rate of penetration, I think the Swiss, the Munich, the partner, and all the international players are still needed in the market, because those are the ones bringing innovation. We are talking innovation, we cannot innovate. All what we are doing is just copy and paste what was happening in the other side. Europe, America, and then we bring it here, and then we do a small massage to Africanize it. And I think it's not going to work. We still need those international players to come here, work with us, not only taking all the premium on the other side, but work together. We need to work with them and define each of us. We know the responsibility of each of us, and then put together products, services in the market. And I think this is going to develop Africa. But localizing, just for localization, I don't think it's going to work. Thank you.
Thank you very much. I'd also just like to introduce Tola, who's arrived. Adetola from
Sorry,
Leadway.
I went to the next room.
They changed the room in the last minute.
Tola, do feel free to take your mask off if you're comfortable, but keep it on if you'd rather keep it on.
I'd rather keep it open.
Okay.
No, of course.
Well, you can hear me.
Yes, we can hear you.
And we're just talking about how can local content policies work under a free trade Africa. So Ntwala, I know that you would like to come in. Please just come in when you want, but Ntwala.
Okay. Sorry. I think I would like to look more in terms of the whole concept or idea of Africa free trade. That is to make sure that at least goods and services can move freely in the African continent to boost trade amongst African countries. Now, to do this, yes, I think when you look at it, it sounds great, but we have to be cognizant of the fact that some markets are more advanced, developed than others. And what we don't want to create with that then is that those that are advanced already take advantage and then are ahead, and then you've got such a wide gap. So what you need to do with that and linking it to localization is to have at least a phased approach to give a period to all industries to develop, and then after that, that is when you start to open up. So that will ensure that, and it with the concept of localization in terms of looking at it at the national reinsurer, that each country that is a national reinsurer has an opportunity to develop its market in terms of skills, expertise, while still, and that is through obviously the collaboration with the international reinsurers and other big companies, so that by the time as Africa we are ready to open, then we can complete completely opening our markets, then at least we can make sure that we all have leveled the playing field, and therefore that I think will benefit our clients, because the prices then will be more competitive as compared to where you open and then you've got this huge gap growing between markets, which we don't want to create. So that's just my view on that.
Okay.
Yeah, I think that there has to be a shift in perspective when we're looking at the continental level. We need to stop thinking as countries and move to a continental perspective. Right now, we know there is already a dislocation in infrastructure vis-a-vis the continental concept. We don't have rails, roads, even communications, including mobile for that matter, and financial infrastructure spanning the continent. So even our governance instruments also need to align with the aspiration that we have spelled out for ourselves in the continental free trade area. So that's important. And in fact, when we look at the local content rules, we can actually see some incoherence coming in. In some countries, we are protecting reinsurance through mandatory sessions, but at the same time, we've got private sector reinsurance companies in those same countries competing against the state-supported players, and that's an uneven playing field for the investor. So it is clearly then time to actually move on. Then, of course, there's a comment that has just been made about accumulation risks within the countries. One thing being patriotic, trying to develop your capital and retention levels, trying to preserve foreign exchange, which is actually scarce. But then what happens when there is actually a disaster, such as the one that Ryan has mentioned, such as a volcanic eruption, such as an earthquake or other catastrophe? What happens? The country finds that it's actually in a very, very serious situation. And in actual fact, governments can be held accountable by their people for what has actually happened in the wake of the same. We are also looking from the perspective of market creation. Yes, this does create a market for reinsurance companies and so on. But then at the same time, if as governments, we could actually have some consistency, we could actually close the loop. It would even help in insurance penetration in the country. Because one of the ways of promoting insurance penetration, one of the ways of creating markets is to tie within that country, within that very country, tie your licensing of traders, of markets, of hotels and so on, to an insurance certificate. And that would actually be advancing insurance penetration in that particular country and bringing much more to the table, even on a reinsurance platform. So there's quite a lot that has to be done. I don't know whether the subject of insurance and reinsurance seems to be so complex and misunderstood in government, because rarely, in fact, getting a government official to listen to you about insurance can be a real effort. Thank you.
Thanks, Steve.
I think it was great, wasn't it, to have the president actually open the thing this morning and to get that recognition, at least in one country. Sorry.
Okay, thank you very much. I think a lot has been said this morning. For me, I want to look at the local content law as a collaborative policy. Now, many countries, they have these laws in place, but the fact is, are they effective? Are those laws working? Are they able to monitor it? Are they able to implement it the way it should be? The fact is, no. We still have a lot of loopholes on this. And then when I mentioned the issue of looking at it as a collaborative policy, I'm looking at it as a way of the developed country supporting the developing countries. And how do you do that? The local content does not preclude the advanced country from participating in the risk in Africa. It only tries to find a way to enable the developed country, find a way to support our various markets. But what do we get? We don't have it properly implemented. These laws were promulgated to support our economy. And interestingly, Africa was set up to support the development of African continent. And for me, I think we can collaborate and work on this law in a way that it will benefit both the African continent and of course the advanced countries. For example, if you look at the oil and gas sector, Africa has been blessed with oil resources. What can we do together to promote this? Promote it in the sense that it will be to the benefit of all. Definitely all the resources, all the benefits cannot be enjoyed alone by African countries. There's no doubt that the advanced countries, the developed countries, they will also benefit in the long run. So for me, it is better for us to work together, cook the cake, make it better, and it benefits everybody. So the fact that those laws were in place does not mean, yes, the various African governments, they don't want the advanced countries to benefit from the resources in the Africa. No, they were meant to encourage those developed countries to support us. And I think it is doable. I believe we can get there. It's just a matter of us working in a way to collaborate and develop those resources. You know, I mentioned the case of local content law on the oil and gas sector. It's quite very important. It's a very, very important sector to us, particularly in Nigeria. And government has come up with certain policies that could not only develop expertise, but also develop some capacities in the local market. And oil is quite large. It's a very, very massive market if we come together, collaborate, and develop it. So for me, I think it's something we can work together and develop and see how we could promote it. And of course, when you also talk about retaining some risk in insurance, particularly in Nigeria and some of these countries, because I market and I work with so many of these West African countries, there are some that are very, very small risk of low value. Is it the general accident class? I don't think even the advanced country is interested in that. You know, these are risks that the local could manage effectively and even efficiently. Now let's look at the complex risk. The complex risk, those are the areas, those are the class of risks that we can do a lot of collaboration and develop it. So for me, I think there are rooms, there are opportunities for all. It's a matter of us working together, and then we can move and fly together.
Thank you very much indeed. I would actually like to twist the conversation slightly in a moment. Before I do that, perhaps we could hear from our regulator, having heard all these views around the table. You know, what's your...
Let me keep it. For me, I think local content is essentially important to secure direct and indirect business opportunities. Also for employment and procurement to home. National and sometimes is hosting and development of local skills, technology transfer and use of local.
Thank you very much indeed. Just hearing what everybody said around the table, and I know there's a few people.
Before you continue, I suggest that you also after my question to the next part. Look, much has been said about the problem. Okay, there are two things. Of course, the essence of insurance and reinsurance is about dispersion, but there is also two critical things. Local companies, there is a craving to grow, to thrive, and there is also regulation. Companies also need to observe the regulation. But you already said that there is a better understanding of the risk being written. Do we really care about the concentration? So, what should we do? I would like to hear about the way forward, the answers and the questions. Is it going to be reconciled? So in the coming, by the way, this has been happening all corners of Africa now. So I would like to hear more about the experienced companies from all ends. Thank you.
Absolutely. And one of the things, actually, I think that does lead very neatly into the next question, which was about the use of local content policies and AI. And I certainly think that the use of technology is probably one of the, perhaps one of the solutions that you're talking about. But I'd like to hear some other voices around the table. Adetola, what's your sort of understanding of it? Do you think that obviously you're a Nigerian operator, do you feel that to expand beyond the borders, you need to, what's the solution for you?
Well, I mean, I think looking at the international rules and regulations, the local laws, and how they've operated in other places, what you will find is that essentially this is more about ease of business, than anything else. So it just makes it easy, for a Nigerian insurer, for example, to probably set up in Cote d'Ivoire, for example, where we have an office, or to set up in another part of Africa. Overall, in terms of local content laws, I think local content laws achieve domestication of the much smaller business, as mentioned by the person that spoke before last. The smaller business are fully domesticated, and I think within that area there's a lot of a need to develop the market better, and why? Because when we talk as insurers, we tend to look at the larger special risk, what we call special risk, which is oil and gas and aviation, and really large industrial risks. But if we're going to shift the needle, it's really more about us as African insurers understanding the type of risks that people want transferred, that people want protected. I think now we, as Oumar mentioned, we basically take policies that are existing and we want to say that that is what we have available and that's what we want to force the customer to purchase. That in itself is a challenge. Now, if we want to really grow our markets, we will find that within each African market, the domestic market is enough to engage the insurer before the insurer can even think of going out of that domestic market. Technology, we tend to leapfrog in Africa. So we'll adopt the technology that is out there. But at the end of the day, we also have to look at the future for the smaller, more personalized, more containable insurances and say to ourselves, what is the future for those? And begin to look at it as African insurers and perhaps collaborate more from a knowledge or technical knowledge sharing angle and see how we can just boost our domestic markets. For the more industrial part, the reality is that for any business person, whether it's American, European, or Asian, you want to write a business at a profit. It's not a charity. So ultimately, if the reinsurance volume you're getting out of a particular market is not worth it, unless you're a charity, that market is just not interesting for you. So you're not going to devote time to it. Now the danger of that is that we don't often get the what I would call the engineering, the more fundamental risk support aspect of it. Our business is essentially providing capital for risk. That's all we are doing. So capital may be available, but does capital understand the fundamental risk that it's bidding on? Now that's a challenge, and that is something that we need to work on by ourselves. And it would also be foolish So I actually think a lot of people will give you something. You need to get it by yourself. And I think we continue to make that mistake, within Africa. We continue to pontificate, we continue to try and say, okay, no, it's not that we're bad, it's not that we're this, all that is, in my honest opinion, I don't think is where we should focus on. I think there's a need to build the risk engineering capacity within Africa. If risk engineering capacity is built, if we get a better understanding of risk, we can devote our own capital to it. Capital will follow what is interesting. Capital will leave what is not interesting. Pure and simple. It's just money, ultimately. So I would prefer not to be emotional about a lot of these things, because as business people, money really doesn't have it. Money is how do I put it now? Money is not tribal, so to speak, if I can use that word. Money is not tribal. Money goes where money wants to go, and it must be interesting. If it's not interesting, it's just not worth it, pure and simple. So Africa trade is good for access to business. Whether money will come or follow it, it depends on us. So there's a lot we can do.
Thank you. Ryan, you wanted to...
No, that's fine. Ntwala covered it.
The only comment I would add on to this is linking it to AI. My understanding of insurtech, blockchain, and there's a lot of conversation at this conference in the forums going on about blockchain, in particular the Africa project with B3I and all that. But let's be very honest, they are not compatible. Artificial intelligence, insurtech, that aspect is global in nature. You cannot then tie it up with localization, local content. They are two opposite ends of the scale, in my opinion. However, as you validly said, if you're going to use AI in a limited way to make processes more efficient, then fine. But if you really want to benefit from the global nature of the bigger, we've gone through the stage of Internet of Things, right? Which is what analytics and algorithms and all that has come from. And we are going into what they call the ledger of things, which is blockchain, permanent records. And there is no way, once you're on that chain, you can erase it. So there are no mistakes you can go back and undo. So if you are going to, that's a unique education process you have to go through. Now, because it is international in nature, how are you going to marry the two together? So that is one fundamental problem you have, and it probably needs another forum on that, But also earlier someone, I forget who, I think probably Lesley when he started it, mentioned a very fundamental point. If you want to localize, if you want to maximize retention of insurance business, start with the strengthening of your markets. Build your internal capacities first. There is, as you rightly said, there is money out there. Money will follow money.
Yeah.
If the transparency of trading in the countries, if the other risk factors which will attract international finance are there and the situations are right, then the money will follow. And your domestic capital base to retain more will be developed. You start from that foundation and then you work up. The other issue I have, and this is more a personal comment, it's not an Afro-Asian comment. It may be edited later, but anyway. I'm in charge in Afro-Asian of opening growing our footprint in Africa. What I am seeing in some jurisdictions is we have a brand. We have a brand which is known, recognized, and is owned by the company. But if we want to set up in certain jurisdictions, we have to assign that brand to local majority shareholders. Right? How comfortable am I giving up a 35-year-old brand, which is been very hard earned over, because the law says, to third parties who may turn around and misuse the brand tomorrow, and I have no recourse. So that would make a company of an international company like us a little reluctant to enter such markets. Thankfully, we have solutions, we have friends. We have enough friends on the continent to get around those situations. However, where companies don't have such connections on the continent, you're not going to get the transfer of skills that is necessary to develop local markets. So sorry, I'm getting off my bandwagon now. That was the point I wanted to make.
Absolutely, thank you. I think that is such a valid point though, because certainly from the UK market you hear that so often, that people either involved in Africa understand it, have friends, or they look at Africa just as a whole continent and see it as too complex and they run scared of investment. Lesley, you were nodding very wisely. Did you want to come back in at that point?
Yeah.
No, Lesley's friend is wise.
So, just to completely agree, and to me, I don't think the comments are really controversial at all, because as we've already, I think, discussed, and everyone agrees that this localization strategy cannot be looked at just in isolation. I think it has to be part of a structured systems way of thinking.
Yeah.
So to your point, if you want to bring in big international players to help you develop your markets, then you must also be willing to open up the shareholding to the international players. You cannot have your cake and
I mean, we take the example of India, for example, a huge market. India started off by not allowing foreigners to take more than 25%.
Yeah.
But then progressive governments saw that the knowledge transfer, etc., was not as much as they wanted it. So they've now reduced it. They've gone to 75%. And they might even go to 100% because it just hasn't worked.
Because also, maybe just to make the last point is that when you look at all these structural market deficiencies, it's the insureds that ultimately pay the price of a dysfunctional system. Because if people don't understand the risk, there's insufficient data, the local market is not good enough, we're just going to jack up the loading, right, to overcome that uncertainty. And then you end up with insurance being more expensive in the market. Then you look at the negative impact of that versus what they're initially trying to protect, and obviously the two are not balanced.
Absolutely. Yara, you asked the question about solutions, and there's obviously a couple of solutions that have kind of popped up there. What's your answer to your own question?
You're bouncing back to me. Let me hear from other markets and then our follow. Look, here we have three categories, right? Reinsurers, direct insurers, and the intermediaries. So there are different perspectives. Mine will only be the direct perspective. I will come to that on later, but I would like to hear from those three sides then.
Sure. What I'm not for is this wholesale local content. I mean, this whole concept of local content started with a view to sort of empowering various markets regarding the retail side of the business. But you realize that with time, with the increase of reinsurance companies in various markets, industry players sort of lobbied that look. If you have a new reinsurance company today set up, that reinsurance company's objective is to write treaties of the local market. How did they do that? Without any experience whatsoever, they would want to be assigned shares on various treaties, and by so doing, they sort of champion this local content policy. Like Yinka said, when it comes to the specialized risk, obviously the sub-region and for that matter the continent, there is quite challenge regarding the capacity. And so I think there's also the perception that the developed world only take from us without giving anything in return, and the level of expertise on the market regarding certain class of business could well be enhanced if the developed world was impacting us on us positively. So we just need to be candid and say that, okay, it's about time we tell regulators that, look, much as you have good intention, much as you have good objectives in ensuring that the markets get a fair share of the businesses that exist, in terms of the capacity, we don't have much. Ironically, you have reinsurance departments of insurance companies being assigned targets. And when you assign a target to a reinsurance department of an insurance company, you're telling that you need to go in for facultative inward fact. Point is the treaty doesn't support it, but because you put burden on them, and because they also have the view that the laws support that, it puts them in a fix. So as industry players, we just need to be honest, candid with ourselves that, look, it's not going to work with time. This whole approach is not going to work. We just need to talk to our partners in the developed world that let's deepen the capacity that we have in terms of the skills, expertise, and not only be seen as taken from us.
Okay. As to me, we need to look at why countries don't know domestication strategies. For instance, in our case, the international giants, reinsurers have been there around for many years, but they could not help us, to develop the market. There was, forex bleeding from the country. They could not even, capacitate the people. There was still gap, skill gap, demand gap. There were not, new products. There was no innovation at all. Some of the people were talking about even innovation in experience sharing. But we could not, develop the market. Still, the penetration level is very high, the insurance penetration level. Throughout Africa, the story is the same. That's why we started to come up with domestication. We want to try it in our own way, So unless, we develop our own people, unless we develop our own skills, by practicing it, we can exchange. As the face of the Ethiopian insurance industry, or it was true for the rest of Africa. So, yes, there are some disadvantages. Yes, they have experience. There is still a lot to learn from them, but we need to do it in our own ways, because we need specific products, very suitable to the local context. And those guides, they were not providing us those things. But still, I believe that there is skill and knowledge gap locally, but through partnership with others, we can bridge this knowledge and skill gap. We have domestic experience. We know the heartbeat of the people there. We know the demand gap. So with partnership with others, we can bring in experience and expertise. At least we can develop, the local insurance industry. Otherwise, they cannot recommend suitable products, suitable, appropriate to the local context.
Yeah, no, you're right. I mean, this is, Liz, you will probably remember one of our earlier forums on a different subject altogether. One of the conclusions we reached that no one knows the nature of African risk better than insurers and reinsurers in Africa. Okay? Maybe this is a time where, if you look at the top of the food chain is the reinsurer, okay, or the top of the risk transfer ladder, shall we say, is the reinsurer. Maybe this is a time for African reinsurers to come together and to pool, because they have more resources than many domestic insurance companies. I'm not talking about Nigerian domestic insurance companies are bigger than some insurers in other parts of Africa. But anyway, maybe they can come together, maybe they can, and they do have in-house skills. They do have underwriters who have a knowledge of underwriting energy risks, aviation risks, the special risks. Pull that together and disperse it to countries where it is needed. It's just an idea. Local cooperation of that nature.
Yes, sorry, Mr. Patel, this, what you say, cyber risks.
Well, yes, so cyber, then energy and aviation.
Those issues are not our concern. For instance, in Ethiopia, agricultural risks are our concern.
No, what I'm saying is I'm not talking about Ethiopia, I'm talking about Africa in general.
Yes, yes.
So every country has a different need, different requirement of specialization. And what I'm saying is maybe, because you see, to attract a Swiss Re or a Munich Re, maybe I'm using the wrong examples, or to attract a Lloyd's syndicate to come and do the knowledge transfer exercise with a particular market in Africa, they need to see the benefit for themselves to do that. Unless they see that, they won't do it. However, if you pool your resources here as reinsurers, and like Africa Re, they've got fantastic people who have in-house knowledge. They handle all classes. And I'm sure Continental Re as well, he's looking at me.
God, he's going to
I won't forget the point I'm making is, if you pool the resources, then there's enough expertise combined that can be disseminated to probably Ethiopian Re, which needs it, or some other Re in Africa that needs it, that sort of thing.
So, sorry, I'm not going to miss out the opportunity for a shameless plug. So we need to talk about agricultural risks, but after the music.
Yeah, Ntwala, you need to come in.
I want my commission, yeah?
Without the broker.
Oh, yeah. I was just listening to everybody talking, and I'm thinking, we're talking about localization policies that have been in existence for a long time, but despite that, we're still seeing that the issue of implementation remains a problem, and then there's the issue of having to develop to strike a balance between risk transfer, as Ryan said, that some of the risks we don't have capacity to handle, but how do we also develop the skills? I wanted to throw it to the house because I had the questions and I realized that Liz will not have me leave me to throw the question back without having an answer. So Udai answered it to say, look, let's pull together the resources, which I think is one way. But I was thinking we need to definitely develop the skills. And one way of doing it is to link, when we are transferring the risk outside externally, is to ensure that at least we link the issue of skills transfer or expertise development in those lines, to ensure that while we are still in the short to medium term, we still have to place those type of specialized risks. We do not have capacity locally to be able to contain. We use the same to make sure that we transfer the risk, the skills, so that we can gradually develop the skills. So, and this goes back to the whole concept of whatever it is we have to do, it can't be done once off, poof. Same with the free trade area or agreement. We have to do it in a gradual, phased way. Allow locals, everybody, give them the opportunity to develop local skills, develop their competitive industries, their competitive nature and so forth, before you start to open up. Then I think we'll be able to really see a vibrant and more growing economies in Africa.
Yes, I was going to just say, I know Yared, you want to come in first?
Yes, I wanted to mention that, as Mr. Patel said, that was, for example, especially risk like aviation. Africa is very good for reinsurance companies and pools, and the retention is very little. So we must go to the international market, and unfortunately, every year the international market increasing the rates even if you have no claim. So it's very expensive to reflect it to the economy and to the country. So
yeah, thank you. And Yara, you were signaling that you have the
Yes,
answer
yes.
to your question.
I'm already halfway through my glass. I'll look this way. This is going to be a concerted effort. Number one, we're blessed by the presence of one of the regulators from Africa. So number one, the regulators. Look, regulation is becoming tighter and tighter in Africa. They've been squeezing it. So we need to have a certain degree of deregulation. It's very important so that the local companies thrive, survive, and develop. We need to have really concerns there. So the regulation is one of the important aspects. Number two, reinsurers. Reinsurers, the rating mechanism, the rating they are applying for Africa, I think they need to rethink that. There is a catastrophe happened in Caribbean, the rate is increasing in Africa.
yeah.
So it's getting increased from year to year, so that we become to lose our appetite to focus on domestication of the risks. So you see, we have to be profitable at the end of the day. Brokers, when you're dealing with international brokers, they want to wipe out the risk from Africa to elsewhere. So it's better that they also need to balance that certain risk should stay or remain in the country, while certain percentage still. Whenever you deal with them, can I take 100%? If not, 95, or then 90. So you see, it's very important that they need to moderate. And finally, direct insurance ourselves. We need to build our capacity. We need to better understand the risk. We need, to revitalize, reboot the way we think about our risk. This concentrated effort, hopefully, will do the question I asked, and the solution you've been looking for. Thank you.
Thank you. Brian, you actually want to say something?
Yes. I actually wanted to.
Sorry, just.
Oh, okay.
Yes, we talk a lot about risk transfer, and I think we've mentioned also the partnership between international and local insurers and reinsurers, and I think even the risk transfer, it's more risk share, information sharing and knowledge sharing, because when I speak to underwriters locally based in Africa, they give me so much valuable information that I can't get out of a presentation or a spreadsheet or something like that. So there's some sharing of knowledge from the international underwriters to their local counterparts, but equally there's a knowledge share the other way. And so as a continent, we certainly need to grow our skills base. And we mentioned earlier about artificial intelligence, and I think this is these two concepts are against each other. So I feel with artificial intelligence, it's probably been developed in less than 100 years. It's taken the human race over 100,000 years to develop the level of intelligence we have now. So when we get the singularity where a machine and a human being are equally intelligent, the machine would have done it in less than 100 years. And then it's going to get even more and more clever. And that will then mean that you won't need a person like me to underwrite a risk.
No more conferences.
No more conferences.
The hotel bar will go out of business.
Yeah. So I'm very nervous about artificial intelligence, not just in insurance, but for all of mankind.
But I think it's a long way away.
I mean, projections are, depending on who you speak to, it's between 20 and 50 years away before we get to the singularity, where they're the same. And then once that happens, it's just going to take off,
Yeah.
would you like to come in, Dan?
Okay. My comment actually is just to re-echo what Udai and the lady from Tanzania, right? Yes.
Yes.
That is what we commented on. Yeah, I think you made a very, very valid point, which I want to agree with you. When it comes to capacity building in Africa, I know that the reinsurers, Africa-Re, and I know Continental, and of course Waka-Re, they do organize trading across different countries in Africa. But one thing you just mentioned now, which I don't think I've ever thought of it, is reinsurers coming together, pulling talents together, and see how we could support those markets where they do not have those required talents. I think it's something that is worth doing. It's like taking steps to spread the talents that were in excess, if I can use that word, excess in some areas of Africa. For example, in Africa-Re, we have a Center of Excellence, where we have pools of different talents, engineers, risk surveyors, different oil and energy experts, and aviation. And I know my colleagues too, we have something similar to that. Those are areas we can as well collaborate with the advanced market to further deepen the capacity of the market. And like I said earlier on, it will still be to the benefit of all concerned at the end of the day. Because one of the major problems that I have identified in our market across various countries is a lack of proper risk management, proper risk analysis, and proper risk rating. And it all borders on capacity, on skills, ability to understand those risks. Because if you don't understand the risk you are putting in your portfolio, how are you able to analyze it, and how will you be able to deploy appropriate rate and appropriate pricing to it? So that is still very, very fundamental. That skills shortage is still prevalent in the market, and it's something we need to work together and collaborate in developing. Yes, steps have been taken, but maybe we need to take more steps, to achieve more of that.
Thank you very much. I know we're getting quite close on time, so we've just got another couple of minutes. But TIRA, I know you wanted to come in on that, and Corinne, I think I'm from you.
Sorry, for me, it's just to flip it again for me. I think it would be foolhardy to actually think an insurance company or reinsurance company can have all the skills, so-called in-house underwriting. I think this is still missing the point that a lot of other industries, internationally, in terms of the risk industry, insurance, you have people who are providing services. You have people who are providing maybe liability risk services. They've taken a specialization in that, they're developing it as an industry. You have engineering services, they've developed it as an industry. Within our market, we are not developing those industries that are relevant and are collateral to our business as insurers. And to think that we can actually get those skills in-house is naive. It will not happen that way. It needs to happen. We need to help and talk and encourage people to go into those areas for insurance purposes. Now, another aspect that is missing, particularly in terms of understanding what reinsurance capacity is, and also understanding the technical nature of underwriting, is that the economics of insurance is also a skill that is missing. A lot of people do not understand the economics of insurance. An international reinsurer is not just going to transfer risk to you just because you're bringing a risk that is worth, maybe 100,000, a couple of, $1 million dollars a year. You're not going to get it. So it's better that we face the reality that these collateral industries have to be developed. Now, I'll give an example. Some years ago, and this is nothing to do with oil and energy, pure business interruption, advanced loss of profit claims, You need a forensic accountant. Even within our accounting industry, we don't have forensic accounting adjusters. We have to get an adjuster internationally to look at this account. If it had been done by a Nigerian accounting firm, they would have looked at it like an ordinary account, audited account, and would have paid a lot more than we should have paid. Now, because we involved somebody who is well specialized in adjusting such financial claims, the claim was properly adjusted, and even the client gained from the adjustment, i.e. the claimant gained from the knowledge of, oh, this is how insurance companies look at these things. So these are these collateral industries that we have not developed in our market. So I won't sit here and say, okay, we need to develop within the insurance company or the insurance company. It's not going to happen, it's naive. So these industries, we also have to look at them, and that is in a way also part of local content. Do we come together as the African insurance market and put together a roadmap to talk to the industries that are collateral to us, to try and see whether we can encourage and recruit them to see the money that is in our industry if they can develop skills in those areas and offer those services. And therefore, we would have enlarged local content. But as insurers, year in, year out, if you like, you have all the international brands in the market, they will use the skill set that they have internationally for their own company. They're not using it for the industry. And, and to me, that is not necessarily a bad thing. Everyone is competing for a share of the market, and everyone wants to compete profitably. If you don't know what to do, that is your business. So for us as Africans, I think it's better that we begin to look at these collateral industries and develop them. I teach students of insurance. I know that even within our insurance companies, as basic as it is, economics of insurance is not well understood. That is even, a starting point for underwriting. Because when you underwrite, when you understand what your capital is and what profit is expected of you for that capital that you have devoted, you begin to think financially. Your underwriting becomes important. You begin to know that you don't have the skill set. You need to go and get the skill set elsewhere. So those things are the things that will discipline you. That, I need an engineer to look at this. I need, a liability surveyor to look at this. I need this skill set. You then begin to go and develop that. Can we develop an African industry for those things, collateral for the benefit of the insurance industry? Insurance industry can continue to look for it, to think they can build it, internally. It's naive. And I think we should begin to talk about something else.
I think with regards to local content, and as an international reinsurer, for us it's key that we share the risk. Much like Brian says, we want the cedants to retain the risk. You are the guys on the ground. Should a claim occur, we rely on you for the information flow. And so I think that skills transfer that we were discussing does work both ways. We rely just as much as the local knowledge as you would do to the international specialized risks, for example. With regards to pooling as a reinsurers, we actually did a training session with Continental Re for the market, and I think that is key. It is about skill sharing. When you talk about local content, I think it was Oumar that said this, it's necessary and it's required, but not just for the sake of having to be local. It should be for the benefit of all parties involved in the transaction.
Yeah. Wow. So I've been left with the unenviable task of closing and trying to summarize what was said today. So many things have been said today. So many important things have been said today. Basically, there's been opinion that localization, domestication is good. There's been opinion for various other reasons it's not good. I think the argument will continue. I had hoped that we would have more than one representative of the regulator side than our friend from TIRA, but because it would have been interesting to get their perspective as well, because they are the ones who drive the idea. And obviously it would be nice to understand exactly what their thought processes are behind that drive. But generally, I think the only conclusion I can reach and probably more intelligent people around the table than me would come to a different conclusion, is that there is no conclusion. This is a debate that's going to continue, and I want to thank you all for your time, and most importantly, thank you for finding this room, which is in the furthest corner of the building, and again, I appreciate your input. Obviously, we will be editing the tape when we get it. It's not going to be Ryan. But let me just conclude and finish the session by thanking you all for your time, your valuable time today. Thank you very much.